The contrast in SoFi's recent news has created a tug of war for the stock's narrative. On one hand, the partnership between the company and MasterCard to enable SoFi USD settlement marks a significant milestone in expanding the company's utility within the global payments network. This move strengthens their position as a tech forward financial powerhouse. However, much of this fundamental progress is currently being overshadowed by the immediate market reaction to the company not being included in the S&P 500. Traders are expressing clear disappointment as inclusion is often seen as a major catalyst for institutional buying. This has shifted the focus of many discussions toward what the company must do to meet eligibility requirements in future rebalancings. Despite the recent price decline, a significant portion of the investor community remains resilient. Many see the current pullback not as a failure of the business, but as an attractive buying opportunity. There is a prevailing confidence in the company's long term growth trajectory, with investors betting on an eventual recovery as the company continues to execute its all in one banking vision. The sentiment is often echoed in couple of communities. People are currently discussing, you know, opportunities in buying the deep and stuff like that. The narrative isn't just about internal company performance as well, the prevailing narrative as well, you know. It's also being shaped by broader macro factors. Global conflicts and economic pressures, specifically rising oil prices, are being cited as primary drivers for the recent downward pressure on the stock. Internally, some investors remain wary of the management's past share dilution. There is a persistent concern that these actions have not only depressed the stock's price, but may have also complicated the path to S&P 500 inclusion by affecting valuation metrics and investor trust. Okay, so this is Monday, the 6th of March, 2026. Let's see what we have. Okay, so the stock is currently showing a lot of weakness. It's correcting, yes, seriously correcting, yeah, showing a lot of weakness within a longer term bullish trend. Yeah, okay, so underlying trend here, this one is sloping just slightly bullishly upwards. Okay, lower prices are expected to continue to print all the way towards the 16th of April, and it has a pivotal upper projection of 26.90. What are the odds that that will print? What are the odds? It was initiated on the. It was initiated on the. Let's see what it was initiated. It was initiated on the 13th of January, and since that time, it has continued to retreat. It okay. Yeah, let's see. It doesn't have anything on its weekly chart. Doesn't have enough data, but we might have some projections. It has, yeah, on the weekly chart, it has a downward projection of 16.76. It has attempted to defy it by the bounce. It printed a bounce on the 20, this past Monday, Monday the 2nd of March. It printed a bounce, was actually accelerating toward it, but just printed a bounce. Okay, so that's the 19.6, 19.16, and then 16.84. There's a chance it might test it at some point. That chance is there. So lower prices are expected on the daily chart. Let's see what we have. So far, it is what's going on. Let's see what we have on the 4-hour chart. On the 4-hour chart, it's saying that we should expect a consolidation going all the way towards the 18th of March. Projections here are saying 15.7, 16.27, 17.2, 18.83, 19.61, 20.08. Okay, so yeah, we don't seem to have much of an alignment sort on the weekly chart. But yeah, that's what's going on right now. So let's see how all of this will pan out, and I'll continue to update you. Thank you very much for watching this video.